Wasn't so long ago you didn't need very many fingers to count the different styles of basketball sneakers. And the price, well, you could buy a decent pair of sneakers for under $30. Way under. Alas, those days are long gone, and in their place, a culture where high-priced kicks mean status, power, and sometimes even big-time bucks.
Now lately, sneakers are getting quite a bit of media attention as the next big investment opportunity. So I did what every rational person looking for a side hustle would do, and came across this channel.
Ago. Essentially my position on the RTO Pink Dunk, kind of go over like my portfolio, a lot of pairs, and I actually got into this investment pretty early.
Wait, what position? The market? His portfolio? After doing some more research, I found out that just last year, a pair of Kanye West Yeezy sneakers got sold for a record-breaking price by Sotheby's for $1.8 million. While I'm asking myself, could this get any more ridiculous, I stumble upon a Forbes article of Rares, a platform that enables users to easily invest in sneakers as you do into ETFs and stocks. And when I went onto the site, I found the same sneaker that was sold for $1.8 million last year, now divided into 72,000 pieces and currently sold as an investable share for $25. Now, before we go any further, to fully understand what's going on in here, we need to go back in history. I mean, really back. But before we do that, welcome to Financial Interest, where you will learn everything you need to know about money and investing. Please like and subscribe if you enjoyed the video. According to the psychologist Christian Jarrett, the initial desire of humans to collect items has started 12,000 years ago, when our ancestors gave up their nomadic lifestyles and started settling into communal lives. Throughout history, mankind always got very creative with their collectibles as an alternative investment. All the way from fine art, wine and whiskey, vintage toys, sports memorabilia, Pokemon cards, and the list goes on and on. Now you probably think only a complex species like the mankind would love collecting random stuff and enjoy flexing about it, right? Wrong. Let me introduce you to the king of all collectors, the satin bowerbird. For this bird, collecting is an obsession that turned into art, with only one thing on his mind: getting girls. The birds with the biggest and best bowers are most likely to find a partner. Female birds will often shop around multiple bowers before making up their minds. So next time you have your partner around, make sure you show them your collectibles. Now you probably heard that the perceived value of any item is measured by its supply and demand. In other words, how much of that item is in the marketplace and how badly people want it. If we translate this concept to the current sneaker craze, the supply is controlled by shoemakers like Nike and Adidas producing limited quantities of some of their sneakers. The demand over a particular sneaker, on the other hand, is a bit more complex, as it's mostly created by influencers' hype over social media before a sneaker release. Let's dive a bit deeper into these two concepts. For anything to have a collectible value, it needs to obey the scarcity principle, which is a social psychological phenomenon that causes people to assign a high value to things they deem as less available.
The reason why the numbers of shoes are made by Adidas for Yeezy, it's not because there's no factory space to build the shoes. They simply are creating this artificial sense of scarcity. When you think about it in that light, it really tells you that the product can't be a larger story. It has to be limited in what it brings.
Why sneakers fit the bill so perfectly? Because everyone loves sneakers one way or the other, and people love owning sneakers knowing only a selective few have. Now, compared to other collectibles like Pokemon cards, which would usually be stored in a box in your house, unless you're Logan Paul of course, sneakers have a commercial use. And is there any better way of getting attention than wearing a $10,000 Nike Dior sneaker on your aunt's inauguration? But what makes one sneaker more desirable over the other? As we mentioned earlier, it's all about the hype and the story, which resulted in numerous collaborations with celebrities like Kanye West, Travis Scott, and Eminem. Shoemakers also started collaborating with other brands not necessarily related to their business line, which turned out to be a great success but also resulted in sneakers such as this teddy bear by Adidas, or the Honey Nutty Cheerios by Nike, and my personal favorite, the KFC Wings collab with Crocs. According to several research firms, the US sneaker resale market size went from $2 billion in 2019 to $6 billion today. and is expected to grow fivefold by 2030 into a $30 billion market. Let's go with this example. This is the Ben & Jerry's Nike collab called Chunky Dunky. It's currently selling for roughly 20 times its initial price, which was set at $100 in May 2020. It's clear that Nike and Adidas are not pricing these sneakers correctly and could easily increase their profits if they wanted to. The question is, why don't they? And why do they let the resale market to exist in the first place? To answer this question, we need to look at the bigger picture. First of all, we should bear in mind that these limited collab campaigns are not a direct revenue generator. They are made to act as a halo for a model line, and their value is far greater in that role. What the marketing departments want from a limited release is social media visibility. They want key YouTube channels talking about the latest limited release to get people excited about the shoe and ultimately the brand. The goal with every collab is to bring as many people as possible onto their site, as well as create huge lines in front of their stores before a limited release. Once the item is no longer available in stores, the resale market will ensure the continuity of the hype they have created. Yet for this strategy to work, the collab itself needs to be a success. As it is often hard to calculate the real demand for a sneaker, to ensure the success of a collab, the retail price is mostly set at the lower end. Imagine paying $500 for a shoe at retail, whereas the demand at resale only supports $400. This leaves a bad taste in the mouth for everyone. It devalues the brand name as well as the collaborating partner. And if this happens too often, fewer celebrities and brands would be willing to collaborate, which will ultimately hurt everyone. Collabs also help to solve another issue. One of the biggest problems shoemakers face is the inventory surplus, particularly in the mid-price shoes. Collaboration campaigns usually target the models that the shoemakers have the most in hand, which otherwise would be collecting dust in a storage. The Nike Air Force 1 is a design coming close to 40 years of age, yet it is still considered to this day as an iconic status symbol. How? The answer is simple: collaborations. Hot collaborations are what kept the model high on people's radar for all these years. The base AF1 is actually a lower priced Nike shoe, compared to something like a Vapor Max series. But collaborations gave it a great prestige and desirability. Maybe you can't have the Cactus Jack, but you won't feel too out of step with a different colorway you can get at Foot Locker. Now, before you consider going into any side hustle to increase your wealth, it's very important for you to measure the correlation between your side hustle, your main sources of income, as well as your other investments. In other words, if you have a sales-driven job and the majority of your investments is in the stock market via index funds, you inherently have a large market risk. If the world economy was to slow down, which would create a large drop in the S&P 500, that would directly impact your sales at work, as well as your investment portfolio. At this point, you will want your side hustle not to be impacted, so you can weather the storm. If all your income sources are highly correlated to one another, despite looking pretty different in surface, when the revenue from one of them shrinks due to external factors, it's most likely that all the others will follow. Therefore, the asset class called alternative investments serve a great purpose in the investment universe to help investors create diversification and lower the correlation of returns within their investment portfolios. According to an academic paper published last year, the correlation between the S&P 500 and the resale sneaker market is fairly low, indicating that if one of them were to perform poorly, it doesn't mean that the other one would too. Now, for anything to be investable, it needs to have a healthy organic marketplace, where there is sufficient demand as well as supply to create price discovery. That is clearly getting established in the resale sneaker market through sites like StockX, which also do a great job in eliminating counterfeit sneakers from being traded on the platform. Once a purchase is made, resellers send the shoe to the platform, which inspects them for damage and ensures they are not counterfeit before sending them to the buyer. It should go without saying that they take a percentage of the sale, but these websites also increase the consumer's confidence in the goods they purchase. Now, in the beginning of the video, we mentioned the $1 million Kanye sneaker which was getting sold as an investable share. The person that bought it is no other than Jerome Sapp, a former NFL safety and also the founder of Rares, the sneaker stock trading platform. This seems to be quite innovative, but since the site was recently launched, I'm not sure if the demand or the market is there yet to trade shares of a sneaker that you won't even get to have physically. For enthusiasts, it would be good to keep an eye on, but probably smarter to watch and observe for some time to collect more data. The market is clearly evolving and the competition gets higher day by day, which will result in lower returns for sneaker flippers going forward. But as explained in the video, the market environment has the right chemistry to scale, as the interests of sneaker producers and resellers are aligned. Could this be a viable side hustle for you? Well, it depends. If you're into sneakers and after having done your research on which sneaker has the right story as mentioned earlier, you could start off small and see if it fits your investment character without risking significant capital. But if you're looking to make a quick buck and just going to type to Google the top sneakers to flip in 2022 and outright buy them, your chances of losing money would be fairly high. As mentioned in our previous video, it's very important to understand what you're investing in, as well as finding the right investment that fits your risk tolerance. This was the first video of our new series called Flippable Side Hustles, where we will analyze the investment opportunities in the alternative investment space. Please let us know in the comments below which other side hustle investment opportunity you would want us to cover next. If you enjoyed the video, don't forget to give it a big thumbs up, and we will see you next week.